Hands down, one of the most stressful, time-consuming, and complicated aspects of running a business is taxes. Keeping track of how much you owe, when it's due, to whom, and more importantly, how to keep them low. It's a lot. Stick around because I'm about to tell you 10 things that you can do to stay on top of your business taxes, save money, stay compliant, and most importantly, stay out of trouble with the tax gods. Hi everyone, I'm attorney Aiden Durham with 180 Law Co. in Colorado, and welcome back to All Up in Your Business. Before we get into my 10 tax tips, don't forget to like, subscribe, and share, and check the description for links to additional information and resources. I'd also like to thank our special partners for this episode, our friends over at Compliant. Compliant was built to help small businesses manage their taxes faster and easier. Their goal is to be a fount of knowledge for small businesses so they can focus more on the business and worry less about taxes. Because let's be honest, for most of us at least, the tax stuff sucks. Compliant was originally built around one great feature: a calendar customized for your business that highlights the deadlines that you need to meet throughout the year for all taxes, not just income tax. Since then, they've added a ton of great features, like a tax budgeting tool and a notice reviewer. You get some tax notice in the mail and you're not quite sure what to do with it? I know I've been there before. You just upload it to the notice reviewer tool and the team of experts over at Compliant will take a look and tell you exactly what it means and what you need to do with it. They've also got this great new tool coming soon called Tax Wallet, which is an automated tax savings tool that's going to help you save exactly as much as you need for future tax bills. You can take advantage of the tax deadline calendar for free. That's right, completely free, not a free trial, no strings attached. They've got a free option for their tax deadline calendar. That in itself, I think, is what makes Compliant particularly great. They've also got this super helpful tax planning playbook that you can download for free. Check the description for a link to download that. But if you want to take advantage of all of the features that Compliant offers, including the tax budgeting, the tax savings tool, and the notice reviewer, you can visit this link and use this code to get 2 months completely free if you sign up for one of their paid plans. Now, this offer for the 2 months free, this expires on December 31st, 2021. So you should get to it soon if you're interested. Visit this link and use the code 180law21 when you sign up for one of their paid plans to get 2 months free. All right, now let's get into my 10 tax tips. Tip number 1. Understand how your entity, your business structure affects your taxes. Not all businesses are taxed in the same way, nor do they report their taxes in the same way. Sole proprietorships and single member LLCs, they report their taxes to the IRS on Schedule C, whereas partnerships and multi-member LLCs use IRS Form 1065. S-Corps use Form 1120S. So knowing how your business is taxed and what form you're going to use to report profits and losses to the IRS is obviously important. Tip number 2, have a clear understanding of all your other businesses' tax requirements. It's not just federal income tax. Of course, in most states, we also have to think about state income tax. There may also be sales tax if you're selling goods or services that are subject to sales tax, which that's always going to vary by jurisdiction as well. Often we're going to have to deal with business property taxes. Most states have an annual report fee or an annual franchise tax, and also any business licenses and fees associated with those. This is where Compliant comes in especially handy. Compliant can help you determine exactly what kinds of taxes apply to your business based on what you do, how you do it, and where your business operates. Tip number 3 is set calendar reminders for when your estimated quarterly tax payments are going to be due. In most situations, sole proprietorships, LLCs, partnerships, S corporations. We have to make estimated tax payments if we expect our overall tax liability for the year to be $1,000 or more. This includes federal taxes, of course, to the IRS, but it can also apply to state taxes. These estimated tax payments are due January 15th, April 15th, June 15th, and September 15th. So mark those on your calendar so you don't forget to make an estimated tax payment. Again, of course, Compliant is going to help with this by automatically adding to the tax calendar when those payments are due to help you stay on top of it. My number 4 tip is take advantage of deductible business expenses. Business tax deductions can, of course, help to lower your overall tax bill by reducing your taxable income. So it's important to know what you can and can't take as a business tax deduction. According to the IRS, expenses must be both ordinary and necessary in order for them to be tax deductible. Ordinary means that they are common and accepted in your trade or business. Necessary means they're helpful and appropriate for your trade or business. Now, necessary doesn't mean it has to be indispensable. It doesn't have to be something you absolutely need in order to operate your business, but just helpful and appropriate. I have another video where I go into more depth about business tax deductions and expenses that you might be able to deduct. So you can check that out. I'll link to that in the description. But a few common expenses that we can typically take as a tax deduction, things like employee payroll. If you have employees, their payroll is a tax deduction. Rent, office supplies, loan, interest, taxes. Yes, in a lot of instances, taxes are actually tax deductible. Insurance expenses, home office expenses, and a lot of car related expenses as well. Again, check the link for the video in the description if you want more info on how to handle tax deductions with your business expenses. Tip number 5, I'm sure you guys have heard me say this before, separate your personal and business income and expenses. Separate your business and personal bank accounts. This is outside of taxes, not even talking about taxes. This is absolutely a requirement when it comes to liability and keeping the liability protection that you get from an LLC or a corporation. But even if you're a sole proprietorship and you don't have to worry about piercing the corporate veil, keeping things separate just helps to keep better track of your income and expenses for your business, so you can keep better track of what you have to pay taxes on and what you can deduct as a business expense. It's also going to make things easier at tax time because you don't have to filter through what was business, what was personal. Just keep it all separate, okay? Tip number 6, set up a tax savings account. Have a separate account. It can be a checking account, a savings account, doesn't matter. Set up a separate account where you put money specifically to save for your tax payments. Now, exactly how much you should be saving, that again is going to depend on your business entity structure, your income and your tax brackets, and the taxes that you have to pay, like if you have to deal with sales tax or not. So exactly how much to save, it's all going to depend on the circumstances of your business. But just kind of a general good rule of thumb is to put away at least 30% of the business income. Set aside 30% to save for taxes. And with Compliant's new tax wallet tool, they make this even easier. It automates your tax savings, so you really don't even need to think about it. My tip number 7 is to save for retirement using a SEP IRA. Being self-employed means that we're, for the most part, responsible for saving for our own retirement. We don't have a pension or any other company that's going to do that for us. A SEP IRA, or a simplified employee pension IRA, is a great way to do this if you're self-employed. Contributions to your SEP IRA are tax deductible. And what's even better is that you can take deductions for contributions that you make up to the day when you file your taxes. So not just for the tax reporting year. If you're preparing your taxes and you see, ooh, I'm gonna owe a big chunk of money, you can instead put that into your SEP IRA to lower that amount. Tip number 8, use an HSA or a health savings account to save for medical related expenses. Now, there are some requirements for this. For example, you have to be on a high deductible health plan. But just like with the SEP IRA, contributions to your HSA are tax deductible. And any interest that you earn in that account is tax-free as well. And then distributions that you take out of your HSA to pay for your healthcare costs, those are also tax-free as long as they fall within what the IRS considers to be a qualified health expense. But so basically, we're using pre-tax, tax-free dollars to pay for health insurance costs, medical costs, and healthcare related expenses with an HSA. My 9th tip is track your business mileage. If you use your car for work, for your business, you may be able to deduct a portion of your mileage. In order to do this though safely, you need to keep track of every business mile. There are a lot of ways to do this. Some people I know just write it down. They keep a notepad in their car, write down your starting mileage before you go out on your business drive. Write down, where you're going, the purpose of this trip, have notes of why this is business related, and then of course write down the mileage to and from that meeting or that trip for your business. Or there are a lot of super handy apps that do this for you, so you don't even have to think about it. I really like Mile IQ. It just notices, as long as you have the settings on your phone correctly, it just notices when you're in the car, and then you can go into the app and say, yes, this was business related, no, this was personal, and it tracks it all for you. I think QuickBooks has a tool like that as well, unless they bought out Mile IQ. I don't know, but I think QuickBooks has a tool for this too. And finally, my tip number 10, keep an eye on your numbers. You can do this by scheduling monthly business days. A specific date at the end of each month or the beginning of each month, a day dedicated to sending invoices, paying your bills, reviewing your expenses, setting aside money for taxes and any other savings, budget for the next month, and any anticipated or upcoming expenses. Dedicate at least a day each month to looking at your numbers and taking care of all of your expenses, invoicing, all your money related stuff. Do a quarterly expense review. We're paying our taxes quarterly anyway, so why not take that time to look over your expenses over the last quarter? Is there anything surprising in there that you think maybe you need to contest with your bank or ask for a refund for? Make sure you recognize every expense that's come out of your account or charged to one of your cards. Are there any bills in there that we can lower or just get rid of altogether? And then calendar your recurring payments. There are a lot of programs, software, apps, things that we use in our business that charge on a monthly or an annual basis. Particularly if you're paying for something on an annual basis, put in your calendar that renewal date for when the next one's going to be charged. So you'll know ahead of time when that expense is coming up and if you need to cancel it beforehand. Because I know for a lot of us, we'll sign up for a program or start using some app or something and it's working great for a little while. Maybe we drop off of it and then we stop thinking about it. But then all of a sudden, we paid a new year for it. We paid an entire new year for this thing that we no longer need. If you can't tell, that just happened to me recently. I forgot that I was using this program because I no longer needed it. And I checked my email and saw, oh, hey, thanks for your payment. You're renewed for a full year. And now I just paid for something I'm not going to use anymore. So put those dates in your calendar of when these bills are going to renew so you, number one, know to expect it and know if you want to cancel it first. That's all for this episode, folks. Drop a comment below. Let me know what you think. And again, don't forget to check the description for links to additional information and resources, including how to get 2 months completely free on one of Compliance paid plans so you never have to worry about business taxes again. Thank you all so much for watching. I'm Aiden Durham, and I'll see you next time.